It is my distinct honor to welcome Lior Gantz with us from Wealth Research Group to talk about these exciting markets for some troubling times that we find ourselves in. But the precious metal space has been exciting. You've witnessed it on this channel. I've been covering it as the markets move. But we're going to talk about silver. We know gold is trading at an all-time high. It looks like the bear market is done. We may see some pullbacks, which are gifts to all of us. But let's talk about silver, Lior. It seems to be joining the ride with gold now. And it's about freaking time, wouldn't you say?
It's a very welcome sign because silver is really the indicator that the gold bull market is expanding. Silver just broke above its 2-year high. It's creating a range where it can break out towards the 33, towards the first rate cut, which will probably be either July or September. So it's looking really exciting for the gold bull market and the precious metals bull market in general.
Now, I have heard talk about hedge fund managers and money managers making a move into exchange traded products and ETFs. In the silver space, we've seen a lot of trading volume that's been occurring there, seeing the opportunity. Are you seeing some of that from your analysis as well?
Absolutely. I think that the retail public is not driving prices higher. If you call bullion dealers right now, there's no excitement. In fact, some people are selling to take profits instead of realizing that we're in a new bull market that will take us a lot higher. And it's not just gold and silver. If you look at inflation in general, you can see that it's here to stay. I'll just give you a few 5-year changes. Dish soap. I mean, can it get any more basic? Up 46%. Right. Sugar, up 53%. Eggs, the price of eggs is up 63%. Soft drinks, 80%. Frozen berries, 43%. Sandwich bread, 34%. Bread in America in 2024, cereal up 34%, frozen pizza up 37%. So when you look at what the average person is experiencing, and then you get down into the nitty-gritty of why it's happening, and at the same time, you see that the Biden administration is taking away the opportunity of rising in the quartiles from the bottom entry-level wages upwards, because the only way you get mobility between the quartiles and people moving from rags to riches, which is absolutely the American way, you can't have that when you flood illegal immigrants into the country, because that deals basically with the negotiating power of the entry-level workers, which otherwise would be much more suitable to go up the ranks. The company, the employers would train them, and they will get better wages. So we see in America today a clear inflationary problem stemming from shortage of workers, for one, and that shortage is not going away. The boomers are a huge generation. The generation that followed them are very small, and because of that, there's a shortage of workers as these millennials get trained up and move up the ladder. And so inflation is here to stay, and that means that hedge fund managers are 100% looking at ways to capitalize on lasting and bumpy inflation reads that will stay with us for at least the next 3, 4, 5 years as America reindustrializes.
I know I've tracked it with cattle futures of all things, and cocoa prices have really skyrocketed. So it's something to see. So that leads us to what Jerome Powell has been talking about and what the Federal Reserve will do. You mentioned earlier that, and I agree with you completely. I think it's going to be until July when they start to lower rates. But they want to stay right where they're at, it seems. And talk a little bit about what the Fed is not doing and doing, and why are precious metals just so awake right now considering all this?
I'll tell you two things. One is that you said we're living in very troubling times. It's true, because we're unraveling the Bretton Woods system that started in 1946. It's basically getting undone, and it's just how bad will this fracturing of globalization and the emergence of a new system get. But at the same time, America is enjoying deglobalization more than any other country. And so when I published my own portfolio at the beginning of 2023, and it rose 54% in 2023, it's to tell you that there's opportunity even as systems get unwind, because there are clear winners to systems, and then there are clear winners to fracturing of systems. So if you look at this portfolio, which has been updated for 2024 at wealthresearchgroup.com/portfolio, you'll understand that tucking money in money market accounts is not the way you deal with deglobalization. You need to be strategic and take positions. The second thing is, how do we react to Powell's language? What Jerome Powell is indicating, and the market is agreeing with him, which is very important to understand for how you trade and invest, is that it's not worth going up with interest rates any further in order to try and get inflation back down to 2% fast. We're seeing a very good trend in inflation coming down, but it's bumpy. And so the Fed has said we are not raising anymore. And so if the Fed is not raising anymore, but inflation is creeping up, it means that real yields are coming down hard. And that is why gold and silver are rallying so big, because the Fed is letting inflation run hot and it's not reacting. And so you basically have a very good incentive to hold precious metals. And that's why the smart money is moving in first. So I think that's really the key here, to understand the dynamics of why gold is absolutely surged in the past 2 months. The big message is we're not raising anymore. Inflation is going to be bumpy. It's going to be well above 2%, but we're not going to do anything because we have a very low unemployment and the best economy in the world. And so we don't care. If this takes 2-3 years, 3 years, it's okay.
We have other factors that I think are coming into play as well, as far as the uncertainty and the troubling times, and that's geopolitical pressures. A lot of things can happen, or a combination of things that could lead us into, potentially even something as bad as World War III. Some people feel like we're already in it to some degree now, but we have what's going on in Russia and Ukraine. There's been some activity and movement there. You want to talk a little bit about that, and then we'll talk about the Middle East.
I'll tell you 3 things that I think just everybody should understand. One, Russia has stretched itself so thin that the likelihood that Putin will make a desperate move is rising, because he's made so many bad calculations and has leveraged his bets so much that any mistake could really crumble the modern day Russia. Now, to those of you that have been watching the wrong type of media and think that somehow Putin is this genius who has a lot of aces up his sleeve, wake up, because if you're actually doing something in accordance to that train of thought, you're going to make big mistakes as well. And so let me clear the air on this. Russia's economy in 2008, Putin realized that the West is problematic because of the subprime mortgage. He thought that the West will lead Russia into some sort of a integration into Western civilization, but got disappointed and moved in another way, towards alliance with China. But he did not do anything with the oil riches of 2000 to 2008. And so he did not build any real economy. 50% of the GDP was tied to oil and natural gas. In 2014, when the price of oil reached $30 a barrel, he was basically bankrupt. And so he invaded Ukraine for the first time to seize resources and to get access to the open seas, where it's much easier and cheaper to ship out their oil and natural gas. When that did not work and did not help him reach his goals, he realized that he has to find another way. The demographics of Russia are so bad. People are having so little children that they just do not have the body count to address their military issues in the way that the Soviet Union has always had, which is to dump a lot of bodies into it and just overwhelm the opponent with the amount of soldiers. They just don't have the numbers. And so he's made a lot of bets, including aiding Assad, which is the dictator terrorist leader of Syria, who turned that country into a narco state. His family essentially runs Captagon, which is the equivalent of what the cartels do in Mexico, to fund terrorism in the Middle East. And he's helping him. He's helping him with war crimes against his people and everything else, all in the name of getting access to the Mediterranean through a corridor that he's trying to build. So that's one bet. Then he, because of all the sanctions, he had to buy a lot of weapons from Iran. In exchange, Iran is blackmailing him like no other nation has ever done. It's humiliating, actually, to see Russia so weak. And so between all of that, Ukraine has cracked revolutionary ways to deal with drones, and they have made such impressive attacks on Russia proper with very cheap commercial grade. You can buy at Walmart, put a little grenade on, and send it to Russia. And that has inspired a lot of other ethnicities and minorities that are the despise Putin within Russia to also do the same thing. And so the entire country is hanging on a thread. And that's important to understand, because now, with Europe seeing this, France is moving in for the kill. France is becoming the top dog in Europe. It's going to be a much stronger country than Germany. In the next 20, 30 years, is going to be the leading economy in Europe. And Russia and France are already at war in Africa. If you haven't read the exclusive report I put on this, where you can understand that these countries have been in war for almost 7 years now, I suggest you download it ASAP, because you have to understand the big picture. wealthresearchgroup.com/Africa. Just do yourself a favor, understand the big picture. The next step for France is to move troops to Ukraine, not for military purposes, but to essentially turn Ukraine into Europe's new Russia and move the resources of Ukraine and secure them for the benefit of Europe, be it iron or oil, gas, coal, and the agricultural commodities. So that's where that war is moving into, and that obviously makes Russia's position in it very weak. France is a very strong military, and de facto, it's taken over from the United States as the biggest sponsor of Ukraine. So when you look at that and understand that dynamic, that is what's shaping up in Europe. If you look at the Middle East, at the same time, America is exiting. America doesn't need to be in the Middle East anymore. It does not have oil interests in the Middle East anymore. It is 100% oil independent, and it can actually use its surplus to export oil and natural gas to its allies. So the direct involvement of the United States, boots on the ground in the Middle East, is over. And so the question is, what's going to happen next? You have one country that is trying to do a strategy that has to do with becoming some sort of a imperial power in the Middle East. That's Iran. On the other side, you have Turkey, arch rivals, both of them Muslim countries, but both of them non-Arab countries. Each of them is trying to align their people and rally them and unite them around some sort of a goal. But these countries are mostly ethnic, and they have a lot of internal rebellions, and it's just not easy. So the Middle East, I see that region continue to bubble up. Then you'll see the dynamics between China, Russia, and the United States in the Middle East. What's very interesting is that disruption in the Middle East hurts China more than anybody else, because they need the Red Sea for their shipping more than any other country. But the Red Sea is being disrupted by a proxy of Iran. So you have a very interesting dynamic here. And so that is unresolved. I think the big picture to understand is that America can choose to be more isolated from all this trouble and therefore gain financially tremendously, but lose its influence as a global superpower, because it obviously won't be able to dictate terms to countries where it provides them less aid than before. So we're moving into a world where the United States is not doing the traditional role of the last 80 years, and that opens it up to new regional powers. And that's, I think, what's really important for listeners to understand. We're moving into a world of regional powers and alliances, some more American-led and some more non-American-led. And that is the real future of where we're going. Is it a recipe for World War III? The answer is I don't think so. Countries that start these wars, traditionally World War I and World War II in Europe, were countries that bordered other countries and then started a war. Here we don't have that situation. China has no direct enemies that it wants to conquer on its borders. If it wants to invade Taiwan, it's the most complicated and sophisticated military operation of all times, and will be a huge failure. Huge. So it's off the table. It's literally off the table. It will be a matter of suicidal prestige decision by Xi Jinping to do that. Russia is a country that cannot win wars. Its military it's basically nothing. The only reason not for the West not to engage further is because they have 3,000 or 4,000 nuclear warheads and a very crazy leader. You want to try and get to some sort of a resolution without driving Putin into some sort of a desperate move. Europe is aging dramatically, and most of these nation states in Europe, like Italy and Germany, are in a phase where they have to reinvent themselves. So those are going to be very slow economies. The only functioning, absolutely top to bottom, a great economy right now is the United States of America, and I think that will continue to be the theme for the next, for the foreseeable future. If you look at China, China's real estate bubble is so bad that I believe that sometime between now and the end of this decade, they will reach a point where the populace will lose so much of their life savings to these bad leveraged real estate transactions that they've done, that there will be a revolt against the CCP. Because the social contract in China is based on this. We will allow you to rule over us in such a draconian fashion where you will have social credit scores and everything else you want, but we want one thing. We want to know that our lifestyles will be better and better from each year. And if you can't provide that, then this social contract is done. And so I think that is seriously in the cards for China.
They are already starting to revolt in one way. They're buying gold hand over fist, almost like going to a fruit stand or a vegetable stand. They've been buying it in small little increments of 1 gram little beads that they use for jewelry. So all of that to say that there is an effect on oil prices, and the oil market could continue to rise. What are you thinking there, and how could that correlate back to what we talked about at the beginning, to gold and silver?
That's a great question. And I think that for most people who have been living in this world since 1971, the shipment of goods, especially oil, on the open seas, nobody ever gives it a second thought. It comes off of the Persian Gulf, it goes through on tankers, it gets shipped to anywhere it needs to. Nobody stops the tanker, nobody tries to bomb the tanker, reroute the tanker, take hostages from the crew. Nobody's trying to blackmail or anything else. And that miracle that has never existed in human history, where piracy was not factored as 30% of the commodities price. As you well know, be it the Spaniards, the Portuguese, the Dutch, the English, if you shipped over the sea, you met an enemy somewhere on the open seas. There has never been security on the open seas. And the only reason that existed between 1971 and today was because of the U.S. Navy. But the U.S. Navy has, in its traditional Bretton Woods role, cannot function anymore. It functioned well when the only other navy in the world was the Japanese, and it was destroyed at the end of World War II. And therefore, you had one navy that could actually patrol all the oceans and respond to threats anywhere. And nobody wanted to mess with it because the rest of the world was poor and just started to get rehabilitated after the big war of 1939 to 1945. In 1971, when the petrodollar system accelerated, this did not change. In other words, the open seas were still the monopoly of the US Navy. Today, it's not true. There are many rich countries with capabilities, and because of the democratization of technology, meaning that in Africa, there are more smartphones than bank accounts. Everybody has a phone. Everybody has access to technology. You have rebel groups and terrorist groups like the Houthis and other proxies in the Middle East, funded by Iran, that can, with rubber boats, change 50 to 80% of shipments going through the Red Sea. And then the same thing can be said about cheap drones. And so I think that people have to realize that miracle of stable and cheap commodity prices that have accompanied our lives since 1991, when the Soviet Union fell and sold all of its commodities to the open market for peanuts on the dollar for the last 30 years, deflating the price of commodities and making globalization real. It's over. And so higher prices for commodities are the norm. They're going to be here to stay. Commodity shortages are here to stay. Commodity disruptions are here to stay. Every country in the world right now is thinking, how can I secure everything? How can I be dependent on nobody? The end of globalization. That plays into the price of oil, which I think is going to triple digits. And if you want to know what's the most correlated asset class in the world to oil, it is silver. If oil's going higher, silver's going higher.
You know, many silver stackers out there, that's music to their ears. They've been wanting to hear that for quite a while. And I'm one of them. I've always thought that silver was undervalued, especially when you look at the all-time highs. It's about time. So I think we're about to witness, at least to some extent, silver catch up to gold a little bit. Maybe I'm thinking the ratio could narrow maybe to 65 to 1. But that's trying to be as conservative as possible because we've been burned before on silver. All right, Lior, this has been very exciting and interesting, and I appreciate that you share with us here. And anything else you want to close with here in terms of the markets as far as gold and silver? You know, it's really tough to say. I know whenever it moves up in these directions, the tendency is for analysts to keep on calling higher prices. I don't necessarily want you to go there per se, but I think the big thing is that we are in a bull market now for both metals. So I'm going to ask you this question to throw a little bit of a curveball for you. What could throw this off track for gold and silver's prices to where they would fall dramatically into a potential bear market? What situation would happen there for that to occur?
The most unlikely scenario is for the Fed to change its mind and to respond to inflation by raising rates further. That would kill the bull market. Not only weaken it, but kill the bull market. I don't think that will happen. It will be suicidal for the Fed to say, you know what, everything we've told the market for the past 8 months is wrong. We were wrong again on inflation, and therefore we're doing 1, 2, 3. I raised the problem, but then I'm also telling you the likelihood of this, I give it a 5% likelihood. The second thing that could crater the bull market is if the global economy outside of the United States starts to look better. Because if other economies join in basically the productivity growth, then you have a situation where you have a lot more workers around the world to be supplied, and that will actually slow the U.S. economy because there will be more competition. And if the U.S. economy slows and slows into some sort of not a recession, but certainly the boom will end, then I think inflation will not be a huge problem, and that could slow the price of gold and silver going higher. Again, what I'm telling you is the worst for China and for Europe is yet to come. The worst is yet to come. The United States is the only functioning economy in the world, and I don't expect that to change. I just want to really hammer home the point that the biggest beneficiary of globalization was China. For 30 years, starting with Clinton, we gave the Chinese everything that a country could ever give another country. All of our IP, our middle class jobs. We looked away when they did everything you can imagine to destroy human rights and reverse engineer and steal technology and steal this, steal that, all in the name of trying to make them more American. The idea was if they were rich, why would they ever try to ruin this golden goose that we're giving them? When you look at China, that is a country that's 100% dependent on global trade. They have nothing to offer but shipping out of their ports. And so they are in a world of pain. And it's only going to get worse. I think that that problem where Europe starts to come back and China starts to come back, that's off the table as well. I give it less than 1%. So the two main changes in the narrative are such low odds that they're not even worth discussing. I think that the third one, which is some sort of a big global recession, that can really be something that I can't foresee what will happen to the price of gold and silver. Because if people have liquidity problems, especially on Wall Street, they can sell off their gold and silver. And so what is the likelihood of a global recession? I would say at this point, it's about a 15%. So the three major reasons why gold and silver will not go higher from here are pretty low. And I walk the talk. I have, in 2024, I have built positions in the most leveraged gold and silver ETFs you can think of. The triple leverage, the double leverage on silver. I am in. And I am going to be even more as the narrative becomes stronger and stronger. This is a bull market. And if you cannot take action in a bull market, you should not be involved in investing.
Those are some wise words. I tell you, for those of you who are not familiar with Lior Gantz, he's been very successful with positions like this. So when he puts his money where his mouth is, it means something. So, Lior, thank you so much for your insight. And as always, what I like to warn people about is, hey, look at all different aspects, take into account different viewpoints, and make your decision on your own. It really boils down to you and your own personal situation. But I agree with Lior. I think we are in a bull market, and I think the metals are going to continue to rise from here. Lior, thank you so much for taking the time to share with us. It's an important time, and I appreciate you using this platform on this channel to talk about the bull market as gold has now reached its all-time high. And I'm going to extend a multitude of gratitude to you and to everyone else for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.